Hey everybody, Sive Morten is here with the Forex Peace Army.com. So let's keep going with our analysis of the euro currency. So yesterday we have created the trading plan, suggested that downside action could continue. And actually the firing of the Lizzie Cook from the Fed has broken the short-term technical background. It's just external event that changed normal price performance, not only on the euro currency, but you can see the same action on the Great British pound and so on. So here today we have a few practical issues that might help you in the making decision on position taking, or maybe give you some ideas as might be useful. So on the daily chart we do not have a lot of changes. Market stands in a tight range near the lows. Trend remains bearish. By the May city we have the Polish bearish engulfing pattern. And as we said, we're not excluding the situation where we will get deep retracement to the either 50% support, 1566, or even 1525. Both of these retracement will not break the chances for possible reversal pattern, because as a hand and shoulders with the possible retracement here, forming the right arm, as a potential butterfly with the bottom of the right wing here, both remain valid if market will reach this level. The problems could start if market will start suddenly accelerating down below these levels, turning to the 114 area. That significantly could increase the scale of retracement, but let's not speak about this right now because it's not currently as important. So we need to take a look at the intraday charts and trying to find some maybe traps and trying to avoid these moments. So on the full time frame chart, what we have yesterday's suggestion that market should retest the 116.70 area has been totally correct. If you had taken position, as we said, if you'd like to go short, consider this confluence, market probably will show this upside retracement. If you have taken short position, you probably feel great. So you could move your stop to the break even, just see what will happen and enjoy the show. For others who haven't taken any shorts, I would suggest two possible scenarios to consider. Obviously, currently to take the short position, it's not very comfortable because you will have to place your stop above this area. That's why for the short position taking, I would consider either using stop sell order below these lows or somewhere very near. So if we have here is 116 or 2, so you could try to place sub sell around 116 or 3, for instance. Why it could be needed? Because if market already will pass through the confluence and start challenging the lows, chances that it will collapse lower and taken out of these lows, erasing this bar, will increase significantly. And very probable that if you will get the fill on your order, here will be some acceleration. If it will reverse fast a bit later, you will have enough of time to move your stops to the break even. Once here market will start grabbing stops that have been placed here. So from this standpoint, I suggest that using of the stop sell order seems more preferable rather than limit order. This is first way how you could act. Potentially you could see that here might be the butterfly, and actually 1.7 extension stands very close to the 618 level, 1540 approximately. And it easily might happen before daily big pattern starts working. The same, by the way, we could say about the Great British pound. So here we have this bounce. Here's, yes, retracement a bit shallower, but Great British pound is a bit different currency. At the same time, I also can't exclude that maybe here's also maybe some kind of the butterfly, although chances for that, well, not as big as on the euro currency. More probable that if euro will start forming the butterfly, here's we could see more like something like Gartner's triple 2 with the retesting of these lows. But in general, the shape of the swings here is on the euro currency, as the British pound probably will be the same. Second way how you could consider taking the short position if you would like to, and you do not want to use the stop order. I would consider it on the hourly chart, for example, 1688 area. Why? Because our yesterday's setup has worked great, but what really could forbid market to show some kind of this, let's call it upside ABCD pattern, and forming a bit greater Gartner's triple 2 sell pattern. For instance, it might be the whole leg and it could start forming something like this. It's also possible, but in this case you will be at much better point. So with the 618 retracement near the resistance level, it might be much better protection for position taking, and your risk will be very small, so you will have to place just about this level. If it will be a bit larger scale, larger steeple. So another advantage of this approach is that actually these two ways are not mutually exclusive. For instance, you could place here a stop sell. If somehow market will keep going higher, your stop sell will be unfilled. You just close it and start watching for retracement. If somehow it will be filled, the necessity of this scenario, well, will not be needed anymore. You could just follow with the stop trade the trade that will be initiated with the stop order. So that's what about bearish positions. Concerning long positions, bullish positions, in the current circumstances, until we will not see clear bullish sign, I would stay aside for a while. So one possible way when it might happen, we should get either clear bullish pattern, which I do not see for now, or we should see some definite signs of the acceleration, some thrusting action. For example, if markets start moving above the 1690, turning back to the top, erasing all this stuff. So in this case, probably we could get something. But for now, because chances on the possible attempt of the breakout are really not small, just based on this recent swing. So if you could identify the market mechanics, you could understand that, for instance, this was initial thrust pullback from the confluence area support, right? So we have here support. Next swing was attempt to break this, because as I mentioned yesterday, here was slightly lower lows been formed. And it means that this attempt has failed. That's why we have made the conclusion that market should show significant upward pullback and retest the confluence resistance. Now this has happened, but take a look what has happened next. Market was not able to break it up and just keep going higher, so it means that this one is not continuation of this one. So this is just a more extended retracement in the shape of kind of the ABCD. Since this is ABCD retracement, it means that that's one, it might be the continuation of this. So from that standpoint of view, I would say, I'm sorry for this long explanation, but maybe somebody interested with that. So I would say that chances on attempt to break the lows now seems higher than probable upward acceleration. If, of course, once again, we will not get some external factors as it happened. So in recent times, it's a lot of the factors that really strike hard the technical background and move it in any direction, which is very difficult to combine this with the technical picture, and because it follows with the different logic. So that's probably all. That's probably enough for me for now. So as a background, if you would like to go short, watch for deep retracement to the 1688 with this ABCD pattern, or use the stop sell order around 1603. For long positions, I think that's not time yet, and we should wait. So let's see how the situation will develop here.